Good evening, everyone. Time for another silver update. This is the daily chart provided by netdania.com. You can click on the link below. Of the Dow Jones Industrial Average, Dow 30, superimposed over the gold price. Now, I've drawn a line here. I consider this the mean, as in reversion to the mean. And you can see that back in the fall of 2011, we had a major divergence with the gold price hitting 1900, the Dow price falling all the way down to about 10,500. We're at the opposite point right now with the Dow all the way up at 15,500 and the gold price touching down around 1350. Now they seem to be reverting. That's to be expected when you see the type of things I'm going to show you that are coming. And that doesn't mean it's not possible that we could bounce in the Dow. You can see this support line here that we are in the process of correcting back to. We've had many corrections back to support in the past and then turned around and rallied. So I'm not saying that this Dow rally is completely out of gas, but my guess is that we're probably going to revert to the mean starting at this point, especially with the down day that we had today in the Dow with gold remaining fairly steady. Now, what is that point? Again, that's to me just the mean point. In other words, that's just to revert to a normal price. On the gold price, you can see on the left that indicates a gold price of 1564. And on the Dow, that indicates a Dow price of 12,891. So that's about a 2,000 point drop on the Dow from present, and about a 1600. I'm sorry, about a 1600 point rise in the price of gold, and that would just bring us back to normal. Now, I think this is inevitable as the ratio has been so skewed out of balance as the paper assets begin to decline and the real assets begin to rise. Now, we have this story coming out tonight. You can see that the time frame is just 4 hours ago, posted on Reuters. This is the SEC moves to tighten regulations on money market funds. Washington, Reuters, a portion of the $2.6 trillion money market fund industry would be required to fundamentally change how it prices its shares, and under proposals by U.S. regulators on Wednesday to reduce the risk of abrupt withdrawals. So remember that part. That's the most important part. That's going to be the gated part. So let's look at what they're talking about here. The SEC said that retail and government funds which are not considered to be at the same risk for runs would not have a floating NAV. Retail funds are defined as those that limit shareholder redemptions to $1 million a day. So there's the exception. The second proposal would give fund boards for institutional and retail funds the authority to impose so-called liquidity fees and redemption gates during times of stress. So what that really means is that at the time you need to get your money out, most you're not going to be able to. So let's read the Zero Hedge take on this. This is a story that's at the top of Zero Hedge. Slamming the money market gates, capital controls coming to the $2.6 trillion industry. Now, I personally have what remains of the little amount of money that I have in my 401k is always in a money market option. That's because I don't desire to gamble on stocks, and I really don't have many other choices. When you're looking at the inflation-adjusted return, then that's a net loss for myself and for many others. Nevertheless, that's an option where people choose to have liquidity over risk. In other words, they're more interested in being able to move their money quickly in times of crisis That's what the money markets traditionally have represented. Now, of course, they are beginning to slam that gate shut. So let's read the analysis from Zero Hedge. And this is from an article that they did in 2012, July. In a nutshell, money market funds, much more on this below, have always been one of the most hated liquidity intermediaries by the central planners. They don't go into stocks, they don't go into bonds, they just sit there collecting no interest. But more importantly, they are inert and cannot be incorporated into the rehypothecation architecture of shadow banking. And perhaps that is precisely why the Fed is pulling the scab off an old sore. Recall that for the past year, our primary contention has been that the core reason for all developed world problems is the gradual disappearance of good collateral and good money assets. Even if the money market fund cash were to shift preemptively into bonds or any other safe investments, the assets backing the cash can then enter in the traditional shadow liquidity system and buy time. The only real goal at this point in the process, the cash itself would be securitized and provide at least a year or so in additional breathing room for a system that has essentially run out of good liquidity, and in Europe out of any collateral. Expect more and more of efforts to disgorge the $2.7 trillion in money market funds as the world gets closer to D-Day. And what happens with money market funds will then progress to all other real asset classes as the government truly spreads out its capital control wings. So there's just a little indication of what's coming. They're beginning to set up rules so that at the time when you most need to move your money out of their system, you're not going to be able to do so. So I wanted to read you a story. This actually comes from 1903. If you remember, I've often mentioned the comment that at some point they would lock the doors and start the fire. Now that's referring to a situation where they get everybody in the theater and then burn it down. That's the analogy that I've used. So I'm going to read you this story just so you can see it actually comes from a real story. This is a story from December 30th, 1903. So that's somewhat ominous in that the anniversary of this fire will be December 30th of this year, the 100-year anniversary. And this story is fire breaks out in Chicago theater. A fire in the Iroquois Theater in Chicago, Illinois, kills more than 600 people on this day in 1903. It was the deadliest theater fire in U.S. history, blocked fire exits, and the lack of a fire safety plan caused the most deaths. The Iroquois Theater, designed by Benjamin Marshall in the Renaissance style, was highly luxurious, had been deemed fireproof upon its opening in 1903. In fact, George Williams, Chicago's building commissioner and fire inspector Ed Laughlin, looked over the theater in November 1903 and declared it was fireproof beyond all doubt. They also noted its 30 exits, 27 of which were double doors. However, at the same time, William Clendenden, editor of Fireproof magazine, also inspected the Iroquois and wrote a scathing editorial about its fire dangers, pointing out that there was a great deal of wood trim and no fire alarm and no sprinkler system over the stage. During the matinee performance of December 30th, while a full house was watching Eddie Foy star in Mr. Bluebeard, 27 of the theater's 30 exits were locked. In addition, stage manager Bill Carlton went out front to watch the show with the 2,000 patrons, while the other stagehands left the theater and went out for a drink. It was a spotlight operator who first noticed that one of the calcium lights seemed to have sparked a fire backstage. The cluttered area was full of fire fuel, wooden stage props, and oily rags. When the actors became aware of the fire, they scattered backstage. Foy later returned and tried to calm the audience, telling them to stay seated. An asbestos curtain was to be lowered that could find the fire, but when it wouldn't fully come down, a panic began. It later turned out to be made of paper so that it wouldn't have helped in any case. Soon all the lights inside the theater went out, and there were stampedes near the open exits. When the back door was opened, the shift of air caused a fireball to roar through the backstage of the area. And you can read the rest of that. You get the idea. Not to say that it was a conspiracy, but it definitely was a tragedy beyond belief. They thought it was fireproof. It wasn't. It was actually filled with flammable material, and they made sure they had the doors locked before they started the fire. So it seems to be the case that the same sort of thing is beginning to line up here. And just to show you that I think that they're fully aware of this, wanted to take you to this article posted on Zero Hedge. This is about the latest Bilderberg meeting that's going to be going on. And he says the only one thing more ominous for the world than a Hindenburg omen sighting is a Bilderberg group meeting. The concentration of politicians and business leaders has meant the organization, founded at the Bilderberg Hotel near Arnhem in 1954, has faced accusations of secrecy. Meetings take place behind closed doors with a ban on journalists. We suspect the agenda, how the U.S. and Europe can promote growth, the way big data is changing almost everything, the challenges facing the continent of Africa. The threat of cyber warfare has been somewhat rearranged as market volatility picks up, etc., and it goes on. So here's your list of full attendees. I'm just going to briefly run over this, and I wanted to point out before I go through this list, I want you to note how many insurance firms are represented, how many Americans are represented, how many Europeans are represented, and then I want you to notice how few Japanese, Chinese, Asians in general, and any of the rest of the BRICS nations. So we've got the chairman CEO of AXA Group, Deutsche Bank AG, Zurich Insurance at Barclays, UBM Evercore Partners, Stanford Graduate School of Business. Here's a newspaper. That's another one you want to note how many media, big media representatives there are there. Prime Minister for Economic Affairs, Shadow Chancellor of the Exchequer, that's Britain. Impreza, Los Ecos, European Commission, Dun and Crutcher, Eurocor. There's some medical there. Here's one of the medicine ones. Telecom Italia. Here's Amazon.com CEO. Foreign Affairs Magazine, of course. The Swedish Minister for Finance. CEO of Heineken. I guess he's bringing the beer. The CEO of Norsk Hydro, ASA, Standard Minewalt, the Bilderberg Meetings guy, Grupo Prisa, a bank group, Cabinet Minister, Danish Minister of Finance, BAE Systems PLC, San Paulo SPA, that might be actually some kind of South American concern. More Bilderberg, McKinsey and Company, Institute for Advanced Study. Of course, we have the Western College, Ivy League dunces in there. Retail Insurance Group, Sabinci Holdings, BP PLC, American Enterprise Institute. More Foreign Affairs, Investor AB, EADS, Goldman Sachs, Halder, Harvard University, French Prime Minister, more Biomedical Research, HSBC, lawyer Tim Geithner, Secretary of the Treasury, a political consultant, The Washington Post, Worky AG, Anchorwoman, LATV, Minister on the Economy, HSBC again, Swiss Council, more Bilderberg, School of Governments, Dutch Shell PLC, Capgemini Group, Inditex Group, Lazard, Johnson Capital Partners, Swiss National Bank, Lazard, Stratfor, and it goes on. So I'm not going to read the entire list, but you get the idea. There isn't one Japanese representative there. There certainly isn't one Chinese representative there. And there certainly is not one Russian representative there. So these are the guys that are getting ready to start the fire. They want to make sure that you're locked in the theater and don't have a chance to get out when the getting is good. So the getting is good right now. You can see from the silver chart that silver is as cheap as it's ever been. I believe probably on an inflation adjusted basis, silver is cheaper or as cheap as it was when it was $4 an ounce back before the bull run began. So there's still an opportunity. The theater doors are wide open. The show has not started. I highly suggest that you don't attend this show, and if you are in the theater, that you probably get out before they start the fire. And we'll talk to you next time.